Good afternoon, and welcome to the end of week market review for March 15th, 2013. We're going to cover a few things today. First off, we're going to take a look at the market news. We just want to get an idea of what's been going on a global scale. We're going to take a look at some economic reports, which will all fall into that market news. We're then going to go ahead and take a look at the S&P 500 and the Toronto Stock Exchange. While we're looking at these two indices, we're going to be looking for the weekly and daily charts. Now, while we're there, we're going to be looking at both short-term and long-term charts. We're then going to go ahead and take a look at the volatility index review, and finally, take a look at one of our great picks. So we can see that the Dow Jones ended up the week up 0.81%. Now, this was after a 10-day winning streak. It did end up ending its winning streak today when it went into the red, but the 10-day streak was the best that we've seen since 1996. Now, the S&P 500 has gone up 0.61% from last week's close. A lot of these gains was just from overall confidence in the U.S. economy. When we look at some of our other commodities, we're going to see that oil is up 1.79% from last week's close. This puts it to $93.45 per barrel. If you look at silver, it did go down 0.76% from last week's close. Currently, it's trading for $28.74 per ounce. Gold is up 0.93% from last week's close. This puts it to $1,591.60 per ounce. And finally, the US-Canadian pair is down 0.89% from last week's close. This puts it now at 1.0194 pips. Right now, we're looking at some economic reports throughout the week. And you're going to notice the one that jumps out the most is the initial claims or the jobless reports. You're going to see that we came in at 332,000 versus the forecasted 350,000. Because we had lower than expected jobless reports, we were able to see the economy push itself up just that little bit higher. What we're looking at right now is the S&P 500 on a daily chart. Now, what you're going to notice is that the S&P 500 has been trading upwards. It's been riding up against the upper trend line, which has been in pace throughout the month of February and March. Now, it is considered resistance, but because that line is rising, it's not going to be very significant. Now, it has pulled back just a little bit today, that we can see the MACD is now flat bullish. Now you see that we've had a couple of days here where it's flattened out and given that blue line a chance to catch up. This is definitely a sign of some weakness, but this is to be expected considering the amount of growth that we've had. So all in all, we've got a flat bullish MACD, and with the black line still barely above the blue line. Right now, we're looking at the S&P 500 on a weekly chart. You're going to notice how much gain we've had this week versus last week. All in all, trading up above its highs here, with the most congestion happening throughout January and February. What we're looking at here is the S&P 500. And again, we're looking at a weekly chart. This time, though, we're looking at about 5 years worth of data. Now, when we look at this, we could just see how high we've gone over the last 5 years. We could see where we've reached the all-time low here just at the beginning of 2009 and how it's pretty much been uphill since then. Now, there definitely have been periods here in 2010 and 2011 where we saw some significant declines. But definitely when we sit back and look at the big picture, we can see that those declines really haven't pushed the markets down at all. So is it possible that we're going to start to see some significant declines in the next little bit? Absolutely. It is definitely a real possibility, but we don't need to be concerned if we see that. It just means that we're going to slow our trading down, become a little bit more cautious, and really make sure that we're only trading the best of the best. Once we see support found again, we'll start buying in again and start trading with more aggression. What we're doing now is looking at the Toronto Stock Exchange. Now you're going to see some resistance overhead at about 12,830. Now the MACD is rising bullish, but you can't really tell. Yeah, it's really only up just a small amount here. However, the black line is below the blue line. So this TSX has definitely been trading in a tight trading range throughout February and March. There's been a few times where it's dipped up above resistance. There's also been a few times where it's dipped down below support. All in all, though, very sideways and uneventful trading. While looking at the TSX on the weekly chart, you're going to see that overhead resistance that we'd have to break in order to see the TSX pushing up into new cycle highs. Putting things back into perspective, we're looking at the TSX on that weekly chart. This time we're looking at 5 years worth of data. And you're going to see that although we've had a pretty good run since the middle portion here of 2012, we definitely haven't been seeing the same types of gains that we did with the S&P 500. All in all, though, we've definitely had a good 2013 thus far. And although we are up against some overhead resistance, it is very possible that we can continue to see further climbs. Obviously, though, we need to see what happens with the US markets and even the European markets. When we look at the volatility indicator, there's two things worth noting here. First off, it's down 10.25% from last week's close. Definitely some significant drops. But what's more important here is that although the volatility indicator is low, it's actually the lowest that it's been in the last 6 months. When we looked back here throughout January and February, while it was trading as low as 12, we considered that to be very low. And with it now at 1130, it really is showing that the volatility indicator could go quite low. We're going to expect, though, that it's going to work itself up next week if the markets end up having some declines. We know that this volatility indicator could really trade between 12 and 14, just like it did throughout January and February, or it could trade upwards to 16, just like it did throughout the months of September and October. If it dips up above that, climbs up above that, we can start to see some increased volatility, which we don't want when we're making our trading. Now, although there haven't been many picks to look at with this week's craziness, actually, with the markets continuing to trade in overbought scenarios, our ITL customers have been able to take advantage of a couple of picks. One of the picks that stood out to us from this last week was one that was posted on March 11th. Now, Avon Products was posted as a pick on the 11th. It then bought and sold on the 12th, giving us a profit of 1.20%. So this pick was not available to our MWA customers per se, but it was available for all of our US subscribed ITL customers. We've also got subscriptions in both the Canadian and the ETF markets to really round out your trading portfolio. If you would like to get further information about these ITL picks and how you can take advantage of them, or if you have any questions about anything that we've discussed, please email us or phone us at the email address and phone number which is listed on the screen. Remember, though, that whenever you are trading, you are going to be putting yourself into the marketplace, and there is going to be exposure to risk. So make sure that you're always trading by the books and trade with caution. This has been the end of week market review for Friday, March 15th, 2013. Ciao for now.